Hello, and you're welcome to Global Business Insights, where we look deeper at the headlines from a business perspective. 3 of 5 judges on a Supreme Court panel in Brazil confirmed an order to ban Elon Musk's social network X and fine those who don't comply. X can still appeal the decision. Kamala Harris is expected to say that U.S. Steel should remain American-owned and operated during a visit to Pennsylvania later today, according to a campaign official for the presidential candidate. This could be the final blow to Nippon Steel's hopes of buying its American rival. Volkswagen says it's now looking at shutting factories in Germany, working back on its pledge to not cut jobs before 2029. This is as a savings program launched last year is struggling at delivering its targets. Just out this morning, Nigeria's headline Purchasing Managers Index was up just slightly to 49.9 in August from 49.2 in July, but remained in a shallow contraction. The data, however, signaled a broadly stable picture for business conditions in the private sector. The stagnation in overall operating conditions, according to the report, was in line with the trend in business activity as companies posted a fractional reduction in business activity. That's for August, similar to what we saw in July. New business was up slightly, the exception being in the services sector, reversing a decline seen in July. That said, the pace of expansion was much softer than the series average. The Nigerian economy grew by 3.19% year-on-year in Q2 2024 from 2.98% year-on-year in Q1. China's manufacturing activity hit a 6-month low in August, with factory gate prices falling and owners challenged in securing orders. The survey showed a lower Purchasing Managers Index to 49.1 from 49.4 in July, also the 6th consecutive decline, and could encourage policymakers to direct more stimulus support towards households. China hosts a summit of 50 African nations in Beijing this week. President Tinubu is already in Beijing to attend the summit, and we'll continue our chat on Tinubu in China, which comes at a time Nigerians accuse the government of being on a spending binge. The Dow Jones Industrial Average was up to a new high last week. Additionally, U.S. gross domestic product grew 3% in the second quarter, surpassing previous estimates. European markets closed also high on Friday, the last trading day of August, as investors considered inflation data from around the world. On U.S. data, the Federal Reserve's preferred inflation measure indicated subdued growth in July, reinforcing the case for an interest rate cut this month. The core PCE, Personal Consumption Expenditure Price Index, excluding food and energy components, rose by 0.2% in July. That's month on month, and 2.6% year over year, in line with forecasts, also proving stability in inflation. Also, we got consumer spending, a key driver of the U.S. economy, increased by 0.5% in July, following a 0.3% rise in June, and also in line with estimates. We also got a raft of data from the Central Bank of Nigeria on inflation expectations and business indices last week. The central bank says the surveys show businesses and consumers expect noticeable improvement in the business environment in 6 months' time. According to a press release yesterday, NNPC Limited is said to be under financial strain due to PMS supply costs, which it cannot fully recover, and which poses a threat to the sustainability of fuel supply. It says it is actively collaborating with relevant government agencies and other stakeholders to maintain a consistent supply of petroleum products nationwide, despite the challenges. Still on China, when President Xi Jinping opened the 9th Forum on China-Africa Cooperation Summit on Thursday, where he's expected to pitch plugging into China's green energy industry to leaders from Gambia, Kenya, Nigeria, South Africa, and Zimbabwe. We continue to look at President Tinubu's ongoing visit to China at a time when his government has come under sharp criticism of being extravagant. Senior business analyst Lekon Shote comments on the trip.
Early last week, Ajuri Ngilale, Chief Press Secretary to the President, announced that President Bola Tinubu will be traveling to China this week. Already, today, 1st September 2024, the President has arrived in China. And according to Ajuri, his visit to China the purpose of his visit to China, will include signing MOUs on agriculture, the broader economy, the green economy, marine economy, satellite technology. But hitherto it looked like the purpose of his trip was shrouded in some level of secrecy. But now, when you look at the ministers that accompanied him, you get a clearer picture of what is likely to be discussed over there. That includes the Minister of Finance, the Minister of Trade, the Minister of Petroleum Resources, Gas, the Minister of Works, and the Minister of Defense. Now, they keep talking about the summit of China-Africa cooperation, which will start on Wednesday. The President needs to be more intentional on this trip. The trade balance between Nigeria and China is roughly $1 billion annually in the favor of China. Nigeria should be thinking of how to improve Nigeria's export to China and other countries. One good way to do it is to develop Nigeria's steel industry. Also, develop rapid agro-allied industry. And Nigeria also needs to expand its railway network. Nigeria should be discussing all this with China that has the expertise in this area, so that we can expand the quality, the capability of the Nigerian economy to process raw materials from agriculture, from mineral resources, so that we can export at a higher price and then make more money. Nigeria should not just be attending a meeting whose purpose is broad-based across Africa and China. That's not specific enough. We need to be more intentional in our dealings with our foreign partners.
Still on Nigeria, NNPCL in a press release warned of challenges in continuing to supply PMS at high costs that it cannot fully recover. My sense has always been that the present business model in the Nigerian downstream sector, indeed in the oil and gas sector, is unsustainable and goes beyond PMS scarcity, a symptom of broader issues. The markets need to settle to free play and deregulated pricing, with more participants in a more open and transparent downstream market. Government stake in NNPCL should be partially sold to private hands to allow it better access to capital and enable autonomous operations fully independent from government. A raft of recent data from the Nigeria Central Bank released last week are worth discussing. On inflation expectations, the view of surveys continues to be negative. Businesses and households respondents believe that July inflation rate was high, as indicated by the negative expectations reading of -61.1. Respondents also believe changes in the price of energy, exchange rate, and transportation were the major drivers of inflation. However, most respondents respondents expect the central bank to soon begin decreasing interest rates. Also on inflation, energy costs increased from 90.6 points in June to 91.8 index points in July, making it the top driver based on the readings. The exchange rate remained consistently high with a slight increase in the related reading from 88.3 in June to 88.8 in July. Transportation is the third driver of inflation during the review period with 88.5 index points. On the future outlook, generally respondents expect the inflation rate to gradually reduce over the next 6 months. On consumer expectations, the overall outlook of consumers in July was downbeat as consumers anticipated drawing down on their savings or getting more into debt. The consumer index is expected to change to positive from minus 41.7 this month to plus 2.7 in the next 6 months. The July 2024 Business Expectation Survey was carried out between the period of July 15 to 19 with a sample size of 1,600 business enterprises nationwide and a response rate of 98.9%. The overall confidence index at 0.1 index points indicates that few respondents expressed optimism on the macroeconomy. The index also dropped by 3 index points when compared to the level obtained in the previous month, that is in June. Business sentiment was pessimistic across most sectors except the agriculture sector in July 2024. Average capacity utilization increased by 4.2 points when compared with June 2024. Also, insecurity, high interest rates, insufficient power supply, high multiple taxes, and extortion and corruption remain major constraints to businesses in Nigeria, according to the survey. Respondent firms still expect the naira to depreciate in the current month, next month, and the next 3 months, but will begin to see some appreciation in the next 6 months. The central bank in the data, which we will continue to monitor, in summary suggests respondents expect noticeable improvements after 6 months as inflation expectations abate and consumer expectations and business sentiment turn positive. But the outlook as at July and in the near term remained grim. Asian stock markets were subdued as investors assessed China's business activity numbers released over the weekend and braced for data releases, providing more clues on US rate cuts later in the month. European markets mostly lower as the first trading day in September was underway and investors considered the outlook for markets and latest PMI data. On data, Eurozone manufacturing activity remained well in contraction, coming in at 45.8 in August as it was dragged down by Germany and France. In the UK, manufacturing PMI increased to a 26-month high of 52.5 in August. The holiday in the US and Canada also implies thin liquidity, also as wins for far-right parties in German state elections, also adding a fresh layer of political uncertainty. Well, that's it from me on Global Business Insights. This is Bode or Shosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Bye-bye.